You to another episode of the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy, such as the deferred sales trust, is an amazing way for you to exit highly appreciated businesses, real estate, GP, LP positions, save a failed 1031 exchange, eliminate the need for a 1031 exchange so you can create and preserve more wealth, or help your clients, friends, and families do the same. For those who don't know me, my name is Brett Swarts. I am the founder of Capital Gains Tax Solutions, and I'm also very passionate about bringing on amazing guests on each episode when I host the podcast here, who are experts in real estate, experts in business, finance, wealth, who are trying and striving to help you create more freedom in your life financially with your wealth, making an impact in the world. And so today's guest is going to deliver. I already know because he came from a trusted friend of mine, longtime high school friend, family friend. And so I'm excited to get to know this gentleman. He's out of the great state of Texas. He's actually originally from the Bay Area, kind of where I originally was from as well, like the Mission, San Jose, Fremont, Pleasanton, Hayward area. And he has a focus on helping people create and preserve wealth as it pertains to industrial real estate and so much more. Please welcome to the show with me, Drew Wahlgren. Drew, how you doing?
Good. Thanks, Brett. Good to be here.
Absolutely. And for our listeners getting to know you for the first time, would you give them a little bit more about your story and your current focus?
Sure, I'll try to make it quick here. I'm the VP of Capital Markets over here at MAG Capital Partners, which is what we're going to talk a little bit about today and what we're focused on. But my story goes back to, first real estate investment in 2011. And, I started living in houses that I fixed up that were complete, they were beaters, as we like to say. So I didn't have much money and I got to ride the upswing of the markets, especially in the Bay Area, as we just talked about, and really started to see some nice gains and how to make that path between active, continuing to invest actively or move to passive real estate income and through, LPs or in syndications as people call them. So I chose to go more passive. I wanted to spend more time at the time in a more corporate role I had that I was seeing a lot of opportunities in, and continue to invest passively under some guidance of some family. My brother, for instance, who was at a firm, and at one point, him and I both were sort of tired of what we were doing, and through a relationship we had with the principals at MAG Capital Partners, we both jumped on the team here and continued to kind of scale that team we have here and the operations we have. And that was back in 2019. So it's been a great ride. Today, our company, we have numerous single individual syndicated deals as well as a few funds that we manage as well, holding a little over 700 million in assets under management. So it's really been a great ride, and we continue to love what we do.
Amazing. By the way, you can learn more about Drew Wahlgren by going to magcp.com. That's magcp.com. Like mag, was it Maglights? I think that's one of them, right? And then CP like Chris Paul. So magcp.com. Okay. That being said, Drew, that's awesome. I love your background. I love your focus. I love your story there. I believe we've all been given certain gifts, Drew, and these gifts have been given just to be a blessing and help to others. I'm curious, what would you say that one or two superpower or super strength that you have? Maybe you can identify that when you're at a younger age, and maybe you know what those are now, right? Hopefully, and how does that help? How you help and bless people today?
Yeah, I'm certainly an outgoing person. I think I've always kind of excelled in roles that have some sort of business development, sales element to it, and I think maybe my superpower is just being really approachable. I feel like I've had a lot of conversations with people where they open up about, in our conversations about investments, right? People will say, "Hey, here's what's going on," and it feels like, wow, they're sharing a lot with me, and I think I just have a nature about myself that allows people to feel more comfortable. I'm pretty transparent about who I am, what I do, and these one-on-one conversations, hey, here's what I've done, here's what I've invested in, mistakes I've made, and my own personal investing journey. And I think that's really helpful. And just kind of connecting with people on a level that doesn't feel superficial and surface level. And that's, top of my head, that's a superpower.
Excellent. Sounds like connecting with people on an authentic way, and then being very approachable and a great person to connect with. That being said, let's dive right into the topic at hand, which is creating steady cash flow with industrial real estate. So, Drew, what is the number one secret to creating steady cash flow with industrial real estate?
The number one secret, wow, we're just going to boil it down to one item. It's really, I would call it the absolute triple net lease. If I were to boil it down to one thing, and really insulating yourself against management and expenses that can be hard to predict. Even the best operators, can get unlucky, frankly, right? Hey, we've done property conditions assessments on a multifamily property, and boom, you have an elevator that needs an $80,000 repair that wasn't expected. It was, supposed to last another 15 years before any major repairs, things like that that can really take you by surprise. So having an absolute triple net lease is something we like because it allows us to protect ourselves, our investors, from those unexpected, not only expenses but also changes in overhead. Right? We're seeing the state that I'm in, Texas, as well as Florida, get hammered with insurance premium adjustments. I mean, they're kind of 3xing. I've heard premiums on every single door on multifamily properties, and that's going to eat away at cash flow. So some of those things are really hard to control, and they're frankly outside of your control, right? You can shop around, or you can appeal property tax assessments as those go up. That's going to be something that can eat away. So using an absolute triple net lease as a landlord protects you from all that, because those responsibilities of maintenance, utilities, insurance, taxes, and even the capital expenditure items like roof and structure, HVAC systems, who's managing the landscaping around this property, right? And that all falls on the tenant in an absolute triple net lease. So as you see inflation really kicking in across, it's been across the economy, it's cooling now a little bit, but over the course of time, even if we land at 2-3% inflation, which is really the target for the Fed, even if we're there, these expenses all go up over time, right? So at some point, your landscaper is going to say, "Hey, I got to feed my family too, and I got to raise my prices a little bit," and that's going to be across the board. And sometimes you get hit hard, like I said, on the property insurance premium rates. So
Yep.
all that is unexpected. Things that can throw a wrench in your pro forma,
Yep.
right?
Makes perfect
And
sense. So it
so
sounds like it's absolute triple net leases because the tenant is responsible for the absolutely everything, right? The roof, the HVAC systems, the landscaping, the insurance, right? That absolutely, you're right. They're increasing drastically with all the natural disasters, even in California with all the fires that's happening as well. And so, because they are paying for that, guess what? You, as the investor, or we as the investor, for investing into that property, it's hedging. It's like a hedge, right? It's going to protect us. It's almost like something like an insurance policy for us, because inflation is going up, costs are going higher, and that's not going to eat away against our NOI. They're going to have to pick that up. Is that a fair summary, Drew?
100%. Absolutely.
Excellent.
And so if you can build in rent escalations along there, you can see that my expenses are staying nil, and you can really predict your NOI increases over time if you have rent escalations built into a long-term lease.
Great. Let's dive into the number two secret, and maybe it is rental increases, right? So, Drew, what is the number two secret to creating steady cash flow with industrial real estate?
I'll kind of stick to our strategy here and what we like. I'd say that number two secret is having a single tenant, and it certainly changes the behavior, versus a multi-tenanted industrial property. What's common out there is you'll see what they call flex industrial, multi-tenanted flex industrial, where it almost looks a lot like a self-storage property, right? You see a series of roll-up doors, and you'll have a series of tenants, right? Smaller businesses usually, Joe Plumber, you have a fabrication shop, you have an auto alignment shop, right? All these guys in there. And it's a lot of different tenants to manage and a lot of different credit to manage. And typically they sign shorter term leases, right? These are smaller credit tenants. So we enjoy having a single tenant property where underwriting the credit risk of a tenant is really boiling down to a single company, right? We're going to spend a lot of time there, and we're going to understand this company inside and out versus, again, Joe Plumber, who may have 4 years of operating history and not much really to say for himself, or even again in multifamily where I have a tenant who I'm going to do a credit, I'm going to get their credit score, but ultimately there's all kinds of other factors in their personal life, right? Hey, their mother gets sick across the country and they just have to jet out and can't pay their rent and they're gone, right? So for us, we'd much rather have a larger, stronger single tenant that we can underwrite, and certainly a lot more recourse if they do default on the lease. But there is more concentration in your tenant base there.
Okay, so make sure I got that. So, number two secret to creating steady cash flow with industrial real estate is finding quality single tenant tenants who are going to be leasing the property out on an absolute triple net basis. And that gives you guys the ability to really narrow niche down into the credit worthiness of these groups versus trying to manage or underwrite 5, 7, 8, or 10, which I hear what you're saying. If there's going to be smaller assets with more I don't want to say doors, but more units in this scenario, right? Tends to be the lower mom and pops type of operations versus the national big credit tenants. Is that a fair summary, Drew?
100%.
Excellent. So, Drew, what is the number three secret to creating steady cash flow with industrial real estate?
I don't know if it's a secret here, but I would say going right down to the fundamentals of the real estate, buy right, right? You're protected from a lot of downside scenarios if you have a really defensible basis on the real estate, right? At the end of the day, again, we're dealing typically with single tenant properties, and I don't own a corporate bond with, Joe's Manufacturing Corporation who does 200 million a year in revenue, right? I don't have a corporate bond there. So if these guys go belly up, right? That's always a possibility. I mean, there's a ton of layers between, where we start an investment in a scenario like that. But let's just take it full nuclear, Chapter 7 bankruptcy, they shut down, everyone goes home. What am I holding? What's the asset that I'm invested in? And it's the real estate, right? I have this great collateral here, and that collateral is only as strong as the basis that you bought it for. So if I'm, well above market or at replacement cost, who's going to buy a 30-year-old building, if it's near the same cost as a brand new building, right? Replacing that. Or where can I position myself for asking rents if I do need to re-tenant a property because I lost a tenant? So all of that's going to come down to the basis. Hey, how much room do I have here? Can I attract a tenant with low rents, or can I potentially see upside, right? Hey, I leased this to the last tenant at $5 a foot. If that full, downside scenario comes to pass and I have a vacant property, maybe if markets are at $6 or $7, now imagine I bring someone in a market. I just saw a 20% increase in NOI. So you want that ability to work through what could be a tough scenario very easily.
I think a good way to say it, maybe, Drew, correct me if I'm wrong, is you don't want to let the lease tenant wag the investment real estate dog, right? In other words, just because you have a great tenant doesn't necessarily mean it's great real estate. You want to make sure you have both so that just in case the worst happens at Chapter 7 bankruptcy, right, that you have the ability to re-tenant it with a new tenant so that you can continue to create and preserve more wealth. Drew, is that a fair summary of what you're saying there?
Yeah, absolutely. And there's always a trade-off. And I think, our experience, leads us to have a really good understanding of the relationship between tenant credit, location, the actual real estate basis, and the yields, right? Because, you could say, hey, I want a great tenant, great location, great yields. Well, that typically doesn't exist, right? I can't go get an Amazon warehouse in downtown Phoenix and see 10% cash on cash, right? It doesn't exist. That's an institutional product that trades at a very low cap rate, and it's a low yield because there's low risk, right? There's a lot of money looking around at these. So, I'll jump into it in a minute, but we found a way to kind of find our little slice of arbitrage and really find for my money, the best risk adjusted return you can find.
Fantastic. We're speaking with Drew Wahlgren, spelled Whlgren, and he's with Mag Capital. Magcp.com is where you can find more about him. It's magcp.com. So, Drew, I want to talk about someone who might say, Drew, it sounds all really awesome and amazing, but isn't Amazon taking over a lot of these single tenant places? Or what kind of tenants are you looking at? Or even a better way to say it would be, what are you saying no to, right? When someone's approaching or you're looking at deals and you're like, I have a CVS, our house in Roseville, at hard corner next to one of the top malls in all of Northern California, the biggest ones. And it was there for years, and now it's just dark. And it's been sitting dark. I think it's become a Halloween, like costume thing during October, right around there. It's just sitting dark, and we used to go there quite a bit. We thought it was pretty busy, right? So what are the ones where you'd say, if you're seeing this, I'm concerned that it may not be here in 5 years, A, because of Amazon, therefore I don't want to touch it. Or help me with any misconceptions that I might have on some of these single tenant assets that are maybe in trouble.
Yeah, I mean, what you just touched on there is kind of more in the retail space, but we own some triple net lease retail as well. And I'll tell you kind of as we underwrote one of these, it was actually give you a quick case study, but the company was and is we still own the property with this tenant. They're on a 20-year absolute triple net lease, and the company is a retailer of firearms and has an indoor shooting range. This is in Kansas City, and great asset, Class A. I think it's a 2 or 3 year old building, beautiful. And that was certainly part of the credit analysis, right? Look at this company, you go, okay, they have 3 locations, relatively small. They do about 25 million a year in revenue, but they have zero debt on their books, right? Their margins are fantastic. And then you look at it from an industry standpoint, right? So if I have a mom and pop toy store, well, I don't know what's going to keep them insulated from Amazon, eating their lunch, right? But in this case, we go, look, these guys are selling firearms and ammunition, right? I mean, Amazon cannot sell firearms on rifles, delivered to your front door. It's not going to happen. So, there's a protection there, right? And then, of course, you have this industry where people do like to put their hands on the products there. And then, of course, you have this sort of experiential element with an indoor shooting range where people come and go and buy accessories, ammunition, or whatever as they come and go for target practice or what have you. So, anyway, that's one particular example. But on the industrial side, to get to those kinds of tenants, yeah, most sort of lay people who don't have a lot of experience with industrial real estate, they think of Amazon warehouses, distribution centers, right? Because we're all buying things online and it comes to us in a box to our front door. And it's a great story, right? We've seen that accelerate over the last 10, 15 years. And then, of course, a massive acceleration of that after COVID. So it's a continuing trend. We're going to see that continue more incrementally over the next 10 years, probably forever, right? As we buy more and more things online, we're going to see more of a need for that industrial space to house the product and load them into trucks and get them to your front door where your life is just that much more convenient. So that's a great story. But what are we doing, right? Typically we're buying properties with manufacturing tenants, right? Who else is using industrial real estate? Manufacturers, food producers, food packaging companies. A lot of these companies, I mean, typically a tenant of ours will be a manufacturer of some form of widget that's a part that goes into an assembly down the line. So they're a supplier to another manufacturer, right? Some examples of our tenants in the industries. We have a manufacturer of gears and sprockets. We have another one that manufactures polypropylene foam packing material as well as insulation for some other purposes, thermal insulation, noise insulation, all kinds of products. And I could go on and on. I mean, it gets really technical sometimes, and it's interesting to see what these manufacturers are doing. They're quietly producing hundreds of millions in revenue, but really serving other industries. This is B2B sales, right? Most consumers don't have any exposure to a product. I'll give you a weird technical one. We closed on a property last year with a tenant who manufactures dose chemical materials for that go on the inside of high pressure sodium lighting systems and metal halide lighting systems that they use for some agricultural use, but a lot in the pharmaceutical industry too. Who even knows about this stuff, right? I mean, we really get to learn about it when we jump in, and then you realize, hey, they're exposed to a number of different industries. They're heavily diversified. Company's been around for 60 years. They're profitable. They're backed by a private equity group who is very sophisticated. So you start to get comfortable with these guys. But these are the kind of tenants that we like because oftentimes are tied to a lot of infrastructure, a lot of must-have industries, right? Things that just don't go away overnight because people's 401k fell down by 25%, right? A lot of these things continue to churn regardless of the state of the economy, which we really enjoy. So there's this whole world here, and most people you don't understand what's happening in these industrial buildings because typically you don't drive through those zoned areas. And when you do drive through those zoned areas, they'll have a sign on it that says, Lowe's Enterprise Holding, something along that line, XBC, enterprises, right? And there's a manufacturing operation inside. And if you really dive in, you'll find that they're making, components and seats for buses, for city buses, right? Something that you would just never buy yourself, but they're being sold
Got
down
it.
to another business and
Mhm.
added in.
Got it. Yeah, Drew, this is fantastic. We're talking with Drew Wahlgren. You go to magcp.com to learn more. Fantastic. Yeah, the difference between retail versus manufacturing, a difference between knowing the story behind the necessity of the tenant to provide the service. I love the story you put about the Kansas City gun place. So that makes sense, right? That makes sense. You can't just have Amazon deliver guns and ammo to your door, right? So there's becomes a barrier to protection there, right? Between Amazon taking over the industry and providing a great service. So all that makes perfect sense. That being said, Drew, you ready for the capital gains tax portion of the show here?
Yes, and I'll immediately say I'm not a tax professional, but I'll give you what I can.
Absolutely. Hey, I'm curious, you. What do you say the biggest frustration is when it comes to clients, friends, or family when they're exiting highly appreciated assets and they want to invest with you? They could be exiting crypto or a business, or they could be exiting even a regular property, right? As it pertains to the 1031 exchange or lack thereof options that they want to be with you, maybe in your fund. I'm not even sure if you guys have a fund model, by the way, or if it's a syndication model, but I'm just kind of curious on how you tackle that when people call you and they have a big gain and they want to invest, but they're subject to big capital gains tax.
Yeah, no, great question. I mean, I run into this, I feel like every week. Someone's got the question about this, and pretty, again, kind of tell them what I can confidently, and then tell them, hey, maybe you need to talk to a professional like yourself, right? So typically, we structure investments as a GP LP structure. We are the GP, the manager of the investment, and investors who join us are limited partners in an entity like an LLC, which owns the real estate. So that's kind of where lies the problem, right? Someone says, hey, I'm so tired of managing my rental houses. I want to be done. And I get it, right? I made that transition to passive a long time ago myself in my own personal portfolio. So they're saying, I'm sitting on all these gains. I want to exchange into your fund. I love what you guys are doing. I want to have exposure to industrial real estate. I love the cash flow. Can I 1031 exchange into your fund? And the answer is there's not a straightforward way of doing that, right? Because they're in the eyes of the IRS, and correct me where I'm wrong here, but in the eyes of the IRS, this is not a like kind asset, right? They're selling a piece of real estate, and what they're asking if they can exchange into is a membership interest in an LLC, which in turn owns the real estate. So those are not like kind assets in the eyes of the IRS, so they're not able to do that.
Absolutely. You're exactly right. And that's why we create a solution for this. And we work with individuals like yourself and others that are exiting highly appreciated assets and do not want to be trapped by the 1031 exchange strict rules, but must be like kind. We call that blockbuster exit planning, where everything has to go exactly right. And oftentimes, for the groups that we work with, it's not like kind because the fund is not like kind. And so it doesn't work. However, we do have a strategy called the deferred sales stress, which does work. You can exit and you can invest into unlike kind assets, such as stocks, such as LP interest, GP interest, such as hard money lending, such as startup companies, really any asset of any kind, cryptocurrency, you can exit from and you can invest into all tax deferred. But you need to have a plan. You have a team. You have to understand what it is and how it works. And you go to capitalgainstaxsolutions.com. That's capitalgainstaxsolutions.com to learn more all about that. That being said, Mr. Drew, we're running out of time. Are you ready for the lightning round?
It's always scary to me, but I'm ready. Let's do it.
Okay, here we go. Knowing what you know now, if you go back to your 25-year-old self, what's the one golden nugget you make sure to tell yourself to do?
I'll buy Bitcoin, 100%.
Excellent. Second question. Hey, it's on its way back up. It's like almost 30,000 a coin now, right? We see it might be a run here. So keep that in mind. Question number two. What's the number one book you've recommended most or gifted in the past year?
Oh, that's a good one. I've recommended this one quite a bit. It's a Tim Ferriss book, and as we're both Bay Area natives. He's a San Francisco guy. Everyone loves the 4-hour work week, but there's a book called The 4-Hour Chef I enjoy. So I'm always liking anything food related. I love to cook, and there's just a lot of weird, interesting tidbits in there. It's a very eclectic book, so check that out. If you want a more real estate or business based one, I would say just in honor of the late Sam Zell, Am I being too subtle? I think is the name of it. So going through the audiobook right now. He's got the raspiest, craziest voice, and he was an icon, man. He was just like a real maverick in the industry. So he's pretty interesting to listen to.
He's probably one of my favorite. That one picture he has, I don't know about that meme, but you see him just looking. You're like, anytime you're going to negotiation, just take the Sam Zell face, right? Like that guy is amazing. Um, and yeah, thanks for sharing that. Question number 3: what are you most curious about right now?
Oh, that's a good question. I've had a thought recently about kind of looking forward, and I'm most curious how things are going to go when the Fed sort of changes directions. With their interest rate hikes. Um, I'm really kind of interested in what the market and how much competition there's going to be for assets. I'm wondering if people are going to say, "Look, the bottom is in," or should I say, the top of rates is in, and people are going to be scrambling to buy assets thinking, hey, there's only one direction it can go from here, right? And that's what I'm interested in is, what the buying environment will be like, because I have a feeling there's going to be a massive amount of competition for assets once the Fed basically says, okay, we're turning the ship to the left now.
You got me even more curious. That's a great point. Like, when that's going to happen, and B, how the market's going to respond to that, how many buyers are going to go, and what's going to look like. You got me curious. Last question, since we're out of time. After all your success, helping all the people you've helped, helping to build, Mag Capital. Curious, how do you stay centered in your values, and how do you stay encouraged to charge forward to reach new heights?
Yeah, great question. I'm a firm believer in creating something tangible that you can put your hands on. I spend a lot of time in front of a screen, as we all do. I love that, but also to kind of stay grounded. It's like go work on building a tree house with your kids. Do something, even if it's small, right? I do a little bit of woodworking stuff, but I can make like a tiny little lime cutting board, and it's just okay. This helps me kind of jostle my brain cells enough and think in a different way and have something I can set my hands onto. So that's my advice for anyone who spends a lot of time in front of a screen. Do something, create something that you can hold in your hands.
Amazing. Drew, I want to thank you for being on the show, and thank you for sharing your story. I want to encourage you to keep using the gifts of being very approachable, transparent, and a comfortable person to talk with. As well, helping people create and preserve more wealth with industrial real estate, right? Understanding the nuances as it pertains to, de-risking your investments as it pertains to single tenant, triple net, absolute lease industrial properties, which, by the way, have been on fire these last few years, meaning a good thing, right? Doing very, very well as the economy and all the crises has happened with COVID. So you want to learn for sure with Drew. Drew, for our listeners listening to you, would you mind one last time? What's the best place for them to find you?
Yeah, find me directly, really at my email. I don't mind putting that out there. It's Drew, Drew at magcp.com, or you can go to our website and kind of poke around and see what we're all about there, magcp.com. And there's some different forums and areas you can reach out to us directly and we can chat.
Awesome. Thanks, Drew. I also want to thank our listeners for listening to another episode of the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax solutions. Not having a clear plan is the enemy. Using a proven tax deferral strategy such as the deferred sales trust and/or investing with someone like Drew with Mag Capital is an amazing way for you to create and preserve more wealth, unlock more freedom, and to make an impact with your wealth, with your family, or the causes that you believe in most. By the way, we're also streaming and recording on Expert CRE Secrets podcast. So all of our commercial real estate experts out there, we so appreciate your support as well. So check us out on YouTube for Capital Gains Tax Solutions and Expert CRE Secrets. And of course, if you're looking to figure out how to exit and invest into a commercial real estate fund, all tax deferred is a better way to put this. Without using a 1031 exchange, you want to go to capitalgainstaxsolutions.com and schedule a time with myself or one of my team members so that we can break down, if you qualify to use the DST, how it might fit for your overall financial plan and vision, and if it could be a good fit for everyone involved. Just go to capitalgainstaxsolutions.com. Thanks so much for watching. We appreciate everyone out there, and we will